Hello and welcome to Crypto Weeklies. In this video, we analyze Near protocol and its token Near. None of the content is financial advice. These are the chart that you're seeing, or the word cloud that's seeing on the screen is the word cloud available on Crypto Weeklies that summarizes last 7 days worth of social media related popular narratives for the crypto market. Right now, the size of bearish narrative is slightly higher than the bullish narrative. This again chart available on Crypto Weeklies. This is the home page of the site under narrative cloud. What you can see that apart from this chart, the heat map over here, you can see that over the last 24 hours, Near protocol has rallied about 21% from its lows. And also over the last 7 days, it has been one of the decent performers over the last 7 days. Over the last 30 days, 30 days, most of the cryptos were down. Near not an exception, but still again decent performer over the last two key time periods. Right now, the price of Near is at around $2.50, 56 cents. And what is good, what has been good thus far, is at least unlike most of the other lesser known cryptos, Near has not taken out its 2023 bottom. It's still above the 2023 bottom of over 84 cents, almost 3.5x above that level. It still has to contend with some now that it has rallied off that low of the early October of at around $1.72. It has to, now to contend with two key risk levels. The first at around $2.58, that's the 20-week simple moving average, and the 21-week exponential moving average at $2.61. So in the span of the next 4 to 5 cents from the current price to the upside, there are these two simple moving average based resistances. Again, they usually take some time to completely get overhauled, and after that the major area of resistance is at around $3.22. That's the 50-week simple moving average. What Near has going for itself, has this series of highs that it made starting March 2024 when the price went above $8, and then again slightly lower than that in December at around $8.25, from that $8.80 to $8.25. If we were to extrapolate this level to let's say late December 2025, the price, if it were to reach the top of this channel, could go somewhere between $7 and $7.20. Coming back to our machine learning based priced analysis for Near, again, this is on the home page of the site, and it has charts, one row dedicated to each crypto. This is the forecast graph for the output of our machine learning model. This is not prompt engineered, this is curated in house. The two standard deviation euphoria ceiling is kind of where the at a weekly average at around $6.12. That's essentially where this price action could meet that white line over here. That's within the realm of two standard deviation possibility, or a 95 percentile bull case if it were to materialize in the next 2 months. Right now the overall sentiment is slightly bearish, but again, if it were to change in the next 2 months or so, that is the bullish ceiling. Again, these are weekly averages, so that comes with a caveat that the eventual candle body could be 10 to 20% higher than the weekly average for any particular week. So for example, in March, as we saw March, the price went to $8.88, whereas the weekly average for that week was only $7.68. So you get the idea in terms of percentage. Over here $8.88, whereas the weekly average at around $7.70. In terms of percentage, that $1.10 difference on a $7.70 difference, that's about the 15% in higher in terms of percentage. So keeping that kind of tolerance, 10 to 20% tolerance on the $6.70 gets you another 70 cents to $1.40 higher than the $6.72 level. So that's the tolerance. Just to account for that, that gets you again, if that scenario materializes, that gets you closer to that descending white line over here, the $7.26 level. So that's some sort of a confluence in that scenario. The regression based model says that the fair value is declining sharply as the price is making series of lower highs and lower lows starting in March 2024. This low again that was made in August 2024 was taken out in February 2025. Again, the low made in April 2025 was taken out in June to October downturn again. So that's why the fair value has gone down. That's a polynomial regression based fair value estimation. That means it's a non-linear model. The key ceiling to look for in the short term is the $3.02 level, again kind of coinciding with that 50-week moving average. Again, if it takes a couple of weeks to get there, that 50-week moving average is also declining, so it could meet that price action at around $3.02 to $3.10. The key ceiling to look for is the 3 standard deviation ceiling. If there is a breakout to that $4.90 level, then the slope of the regression function could change in the short term, and could that could propel the rally to that $7 level. That's how the price could get there if it were to get there. The time weighted average price model is kind of depressing right now. The price is below the time weighted average price, but historically speaking, whenever the price was below the blue line, come the euphoria phase, if you were to have the benefit of hindsight, accumulating below the time weighted average price, especially as not just using this model as a standalone model, but again kind of correlating with the other models such as the DCA model. If both of 2 or 3 models were having flashing that sign of accumulation, so for example over here in October 2023, even this model was in this purple shaded region, or even in April 2025, if 2 or more models again had that similar purple color or less than 10% risk scenario, then accumulating at that level was definitely not the worst idea historically speaking. Right now, although the time weighted average price risk is in this purple shade or less than 10%, the DCA or the regression risk has elevated to 74%, as the regression based fair value that we just saw applied to the daily chart instead of weekly charts is going down with time. So that's why again right now DCA is not as lucrative as it was back in April 2025. Back then, although the regression line was much higher in March April 2025 at around $4.65, now the fair value has gone down to about $1.12. So that's how the models help identify or tune out the noise based on the 4-year cycle theory. If we were to look at the simple moving average price based risk, it has elevated to 0.36. In the major rallies, it has at least went to somewhere between 0.5 and 0.6 risk. If it were to go to that level again, that's when the $7.70 to about $8.60, that's the theoretical possibility per the simple moving average price model. If we were to take individual models and try to tune out the noise and be in favor of these regression based predictions, again the weighted average base peak forecast, again for near the base case, again that would be the most conservative one, to rally to $3.22. That would be essentially going to that blue line again over here. These models do not talk to each other, so the conclusions from this model, these disparate models, if they're pointing to one strong area, that means the forecast arrived with different paths. If it's leading to one single range, that kind of adds to its confluence. The bull case is at around $5.40, as I mentioned previously. That's where the 0.236 level is also confluent at, and slightly lower than the previous highs, if that kind of a muted bull run is ahead of us, and the moon case or the everything lining up perfectly from here till December, that's how the price could go to that $8 level before meeting that descending line over here at $7.20. And again, if there is a candle body wick slightly higher than that could propel to $8 level. With that, I'd like to conclude the most area of confluence at around $7 and $7.20. If there is a if the market does not consolidate before now and end of year, then the next area is at around to look for is $3.22. with that, I would like to conclude. Hope you enjoy the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.